Hello, everybody. I'll just give a brief summary of the presentation I gave to the investors at this CLSA forum yesterday morning. I addressed two main subjects. One is obviously the US election, the other the situation in India. On the US election, the interesting point from the election of Donald Trump is that it has triggered a sell-off in the US bond market as investors have focused on the dramatic pro-growth policies which have been articulated by Trump in his election campaign, which are basically aggressive tax cuts, big focus on accelerating infrastructure spending, and maybe corporate tax breaks to incentivize $2.5 trillion estimated of U.S. corporate funds back into the U.S. So this is raising expectations of pro-growth policy in the U.S., and that's an interesting situation. The dollar has rallied. So the issue for me is how much will the bond market sell off before the inauguration happens, and whether technical factors will create a bigger sell-off unwind in the bond market. I think that is clearly a possibility. My base case also is the Fed will go ahead with a rate hike in December because the last labor data in the US showed rising wage growth. On India, I remain structurally overweight the Indian equity market. In my view, this remains the most promising equity market of the major global emerging markets globally. However, clearly all the news flow, all the focus this week is dominated by the demonetization scheme. In the big picture, this is the proof, if it were needed, that Prime Minister Modi is the most reform-orientated of political leaders in the world today. This is a dramatic move. Most particularly, such demonetization moves normally happen in the midst of macroeconomic crises. There is no macroeconomic crisis here. I agree with the view of CLSA's Indian office that this basically amounts to short-term pain for long-term gain. We believe the downturn in the economy will be 3 to 6 months as a result of these measures, maybe longer in the specific case of the real estate sector, but clearly the long-term benefits are huge. I've seen a lot of noise and discussion on the TV channels about criticizing various implementation measures of the scheme. But clearly, the practical issue is that you have to keep such an announcement very secret, so it's difficult to get all the practical problems ironed out, though maybe it would have been advisable to get some people informed of the coming event who know about more operational procedures in banking, such as converting ATM machines and the like. But in my view, so long as this is sorted out in the next 4 to 8 weeks, the damage will not be too great, and it seems to me that the regular, ordinary people will support this measure. So I think it's a very exciting long-term measure. I also think another positive consequence of this measure is that it should lead to an increase in deposit growth in the banking system, and that increase in the deposit growth should give more room for the banks to pass on lower interest rates to borrowers. And we also have at CLSA an out-of-forecast consensus, I believe, of 3 rate cuts next year, because we're assuming the inflation will come down, deposit growth will grow in the banks, and that is an interesting situation because it means that India may have the ability to cut rates, where in the US, this rising bond yields are making it more difficult for other emerging markets to make such moves. But with that, I'll stop and I'll hand it over to questions.
Manvi from NDTV, I'll take the first question. Your thoughts on how severe the short-term pain could be, and what is short-term?
No, I've just arrived in India, so I'm not really the right person to answer that question. But to me, it's likely to be 3 to 6 months. But in the specific case of the real estate sector, it may be longer.
What, to your mind, are the key advantages of this move, coming as it does when the economy is in good shape?
Well, this move has nothing to do with the cyclical nature of the economy. It's to do with I think, to clean up the system, but also I believe it's a key aspect of Prime Minister Modi's agenda since he came into government to try and promote digital banking. It seems to me this will be a key catalyst for that whole agenda.
Chris, you've already, I know you're bullish on India, but you further added 2 percentage basis points to the India overweight stance. What makes you so bullish on India, given that in the near term there's going to be a growth concern as well as risk of earnings getting impacted?
No, that's just a relative call. All I did there was I reduced the big overweight in Indonesia, moderated it, because Indonesia has outperformed India a lot this year to date, because Indonesia is an example of a market which has been a big beneficiary of a lack of rate hikes by the Fed, and there's been a big rally in emerging market debt this year in the world, less so in India, and the big emerging market debt rally is now vulnerable short term because of the higher bond yields in the US, the sell-off in the US bond market, which is feeding into emerging market debt, which is triggered by the Trump election. Actually, Indian bond market has been incredibly resilient since the US election, so has the currency, at a time when other emerging market currencies and emerging market bonds have been selling off because of the Trump-triggered bond riot in America. So the reason the Indian currency and the Indian bond market have been stable is precisely the demonetisation announced by Prime Minister Modi. So that's the positive side of this demonetisation. The negative side is the growth going to slow. As I say, the part of the Indian economy most driven by cash is the real estate sector, most particularly in the smaller cities, and there you're going to have clearly a crunch.
You've been bullish on the Indian real estate sector, right?
Yeah, but the real estate sector in India was looking just like it was bottoming and starting to recover. That was my view anyway. That, I think, was the view of my Indian-based colleagues here. So obviously that's now going to be delayed.
Chris, this is Chetan from DTVI. So I would like to ask you that demonetizations triggered a lot of low for the markets initially. So
they triggered what?
Triggered a low growth in the Indian markets.
Which market?
In stock markets.
All right.
So what do you think the situation will be in the next two, three months to go? Because we can expect a rate cut coming soon in the next 3 months. So when do you think the markets will be reviving and the slow growth will be coming up?
You should assume the growth is going to slow. If you want to be conservative, you should assume the growth will slow down for 6 months. But the compensating factor is hopefully the ability to cut rates. Yes, in my view, this is fundamentally a positive move. Therefore, there's no point selling all your equities unless you're very short term. But obviously, if you own property stocks on leverage, or if you own housing finance companies on leverage, or if you own cement stocks on leverage, you probably need to sell some stocks. Now,
can outperform next year? That's what you said.
Outperform what?
Other emerging markets.
If it's only 6 months slowdown, yeah, I do, because there's an ability here to cut rates.
What's the most frequently asked question at this conference? You've been interacting, and I know you've had a very busy schedule, we understand, from your team. So what's the most frequently asked question from members who've attended?
No, the investors are not so bothered on the near-term, short-term impact. But obviously the people are just trying to get their heads around how this will work in practice, because obviously this was only announced last week. The other point to realize from the point of view of foreign investors is this demonetization move in India was literally announced the same day as the US presidential election results were coming in. So in many respects, from a global international perspective, it got lost. The news got lost in the obviously huge focus on the US presidential election result.
Christy wrote in your note last week that the surprise Trump victory has led to a bond riot. How long this can continue, and where do you think the dollar headed, at least in the near to the medium term?
No, I mean, the bond riot can definitely continue because we are now, I believe, overnight at a key technical level on the US Treasury bond, which is 2.25. So if we break that level, then I think the bond riot can continue a while longer. So, because the point is, the market will be anticipating this very change in policy in the US economy, But it's hard for the market to totally discount it because Donald Trump's not going to actually even be in power until the inauguration. So we've got a period of several weeks, which can, in my view, makes the bond market vulnerable to more of a riot. Where I've been wrong is I was expecting the dollar to sell off on a Trump victory, and actually the dollar's rallies. So that is a surprise to me. Why has it rallied? Because two reasons. The narrative of the dollar rally are twofold. One, because the bond yields have gone up, so there's higher rates. Two, because people are looking at Donald Trump's got this proposal to give a tax amnesty to U.S. corporates who are estimated to have $2.5 trillion sitting offshore to avoid paying U.S. corporate tax, which is the highest in the world. So if this $2.5 trillion all comes back to America, that's viewed as dollar bullish. So the interesting point is, will Donald Trump demand a quid pro quo, i.e. if you bring the money back to take advantage of this lower corporate tax rate, will he demand that you do something with that money, or not just buy back your own shares, which isn't going to help the economy.
You mentioned about Fed, you're expecting a rate hike in December. How about 2017?
And now I've got no idea about that. It all depends on what Trump does. There's no point even having a forecast on that because we don't know what the policy. We think we know what the policy is, but it's not forecast. I mean, it's not implemented. So I think the Fed, in one respect, will not want to raise rates now because the dollar's rallying, the bond market's selling off. That amounts to a clear tightening for the U.S. economy. But for the Fed not to raise rates, having basically indicated they would raise rates, just because Donald Trump's elected, would look a bit political. So I think they're kind of stuck.
Chris, we already see the dollar rally, and now there is a hope of Fed hiking rates in December. Given all this, what could be the impact on the emerging market flows, both in the debt market and in the equity market? I'm asking this because most of the global investors are still very overweight India. Will the overweight position in India get impacted?
No, because the big sell-off in emerging market debt right now is triggered by sell-off of emerging market debt markets, which are markets like Brazil, Turkey, Indonesia, and actually that's where people have big profits in 27. They don't have big profits in India. They have big profits in these emerging market debt markets. So they are now rushing to sell before their profits disappear, because fund managers are based on calendar year returns. It's the middle of November, and they're going to be worried that this bond sell-off continues, and therefore they risk losing all the profits they made. India is not in that trade. They didn't make big money in India. They've got structural long-term positions. The bond market in India is not selling off. It's actually India is defensive in that respect.
But the equity markets, do you think there will be a bit of a
the Indian equity markets are vulnerable in the short term simply because of the anticipated slowdown in growth caused by the demonetisation measure. But for long-term investors, it doesn't make sense to panic out because it's quite obvious the longer-term implications of the demonetisation measure are positive. The key issue here is not the measure. It's quite obvious it's positive. The key question is the implementation. Do they get these ATM machines, reconfigured in a sufficiently quick time?
So do you see any outsourcing sector being vulnerable if Trump is going to only focus on America, make America great? Will the Indian outsourcing industry get?
Yeah, we'll have to see. There's a scare story about that. I'm not so worried about that right now. We'll have to see. My base case is that Donald Trump is not an extreme protectionist. In my view, he will want to renegotiate trade deals, as opposed to implement, big tariffs. But we'll wait to see. We'll have to find out.
What's your call on gold and crude for 2017?
Well, on gold, our gold's going to be. Gold right now is selling off, one because of the pro-growth policies expected by Trump, but two because of this dollar rally. So actually, I'm surprised the dollar's so strong because a lot of what Trump's doing, he's talking about big increases in debt, which a country already has a high fiscal debt, so ultimately Donald Trump's policies could be highly inflationary. which could be good for gold. But in the short term, gold selling off, I think primarily because the dollar's rallied.
Chris,
Okay, no more questions. Okay, we're stopping the live broadcast now.
Stopping it, okay.
Okay, this is Manvi from NDTV. I just wanted to capture some of the thoughts that have been expressed today. 2017, the India equity outlook. What are the positives to your mind, relatively speaking?
The biggest positive is we're hoping the interest rates will come down in the context of currency stability.
And do you fear that there could be a further downside risk from the demonetization move that is in its very early days and tough to estimate at this
The
stage?
growth is undoubtedly going to slow on a two-quarter. Yes, so the negative is slowing growth, without a doubt. And clearly the hope for earnings pickup has been delayed further. And the positive is hopefully currency stability and ability to cut rates further. So in the short term, it's a better story for bonds and equities.
And sectorally speaking, the equity sort of options out there, given that real estate is going to be under pressure for at least a year, how does the sectoral picture within India look?
Well, yeah, to me, in the short term, the sectors I owned, like cement, autos, housing, finance, will be under pressure, but I'm not going to sell them because to me the question is when you add to them. So I'm going to be looking to add to those sectors, but clearly in the short term they're going to be under pressure.
Okay, two more questions before we...
Chris, hi. What is your outlook on Indian IT and pharma sector considering Trump's win, and he's been purely negative about these two sectors in India? So what is your view?
I don't think he said very much about these sectors. I'm going to wait and see. I wouldn't jump to conclusions. I think the initial focus on Donald Trump's and trade issue will be first and foremost Mexico. That's why the peso has been under big pressure. I think Trump's focus on Mexico will be to renegotiate the deal, and then the focus will switch to China. I think India's back of the queue. As I'm not, but I wouldn't get too. Meanwhile, I think on the health, I don't see any big issues on the pharmacy side. Yep.
Right, okay. So the GST slab rates are out. So what is your reading about the government enabling to reach the deadline of April 1st, 2017, and what is the impact on the commodity markets when the government reaches the deadline?
Well, clearly, there's a risk the deadline implementation may be delayed right beyond March 31st, but the key thing is we've got the things underway. So what I'm hearing is if it's not going to be implemented by the end of March, it should definitely be implemented by September.
Last question. So what other reforms do you think that the government should take?
Now, I think the government's done a huge number of reforms. No one can fault.
And India has a close to about 8 to 10%. So what other government?
Now, the key missing link in this government remains what it has been for the last 2 years, is that we still haven't yet properly recapitalized the state-owned banking sector. So to me, my only criticism of this government, because there's been a huge number of reforms, is that the issues in the banking sector have still not been fully addressed, and the failure to fully address the issues in the banking sector is slowing the capex recovery. So we are still not going to get an investment cycle to re-accelerate this year. So the capex is not going to come back. The only investment going on in the Indian economy is government finance infrastructure. We were hoping here at CLSA that the property sector would start to pick up, which would create more investment, and that's clearly been delayed now by the demonetisation.
Any impact on road sector you see?
The road sector has been happening. The government infrastructures, that's the one area which has been happening. Yeah.
Thank you.
Thank you.